Hey, good morning, guys. Thanks for joining live. Happy to be here on this really um, warm morning, but it's way better than the people in the South have it. I know uh, we're at least equipped to handle snow, and southern states aren't. So I'm glad we haven't gotten near as much as they have. But let's jump right into it. And I have had some glitchy internet this morning, so if it glitches out or something, please text me or let me know. Um, just holler. We're having a few issues. All right. So this week there's some significant things happening in the grain markets, and and I think the backdrop of that needs to be really well understood. So if you look at where we are in the year, we've been letting the demand side of things drive it, right? Think about it. We've harvested our crop. We know what our production is. Nothing, nothing's growing. The wheat is dormant. So everything in this time of year is demand driven. So now that it's the middle end of February, now we start to turn our focus towards planting. So the question is, how many acres are we going to plant, and how many bushels are those acres going to yield? Right? We've got to start working on the supply side of that demand table. We already know that the USDA completely ignored the demand side. So right, we sold more corn than we've ever sold, and they didn't increase exports. So that as mind blowing as that is, now we get to think about what they're going to do on acreage. So this week, starting tomorrow, the USDA is going to host their Outlook Forum, which is just a forum. It's where their economists are going to tell us how many acres they think are going to be planted of each crop: corn, wheat, soybeans, and cotton. And then fast forward a month, at the end of March, then they'll release their March planting intentions. And those aren't the same thing. The forum is just their opinion. The planting intentions report is actually um, survey based. Um, but but nevertheless, the market's going to start trading what they say is going to happen. So what are they? What are the analysts? What are the powers that be think are going to happen? And to be clear, we're not one of those analysts. Nobody calls us. But what I'm reading is that the kind of the general consensus is that corn acres are going to be up 2.5 million acres ish, right? 2.5, 2.6, 2.7. They're going to be up 2.5 from a year ago, and bean acres are going to be up 6.5 to 6.8 from a year ago. So we're going to have more of everything, and we should expect them to use at least trendline yield, if not trendline plus. So I so these reports that are coming out should be bearish information, right? Because we just have a lot of supply that the market might think it has to absorb. So with that backdrop in mind, let's look at what the fundamentals are telling us. Oh, wait, hold on. One more thing on fundamentals. Uh, this week, the Chinese are on their lunar holiday or whatever they call it, right, where the whole country shuts down. So you've got all the bears running around saying, "Well, China's not buying any more corn." Well, we knew that because they go on the same holiday every year, and the market. That's why they bought so much leading into it. The other thing that's happening is South America, right? Their harvest is way behind, and their safrinha or their second corn crop is way behind in planting. So we've got late planting issues and late harvest issues to deal with in South America. And yes, we know that they have supply. Yes, we know that it's coming, and yes, we know that China will buy some of it. So I don't think any of that's bearish necessarily. And it shouldn't take much of the wind out of our sails. All right, so here's corn. Um, we've been struggling with this divergence down here for several weeks, and I can click through as many indicators as you want. Every one of them diverged at this top. So there's really no surprise that we broke. Now this divergence has been satisfied. So the divergence is gone. What's in control now is this hook revert, is this massive outside day down, right? When what is that? Well, it's when you exceed the prior day's high and then turn around and close significantly lower. So when this formation happened, that's a sign of a top. And then it was followed 2 days later with, you guessed it, a sign of a bottom, right? You have new low, a reversal, and come back up. This would be a piercing pattern, is what the candlestick people would call it. So you've got a reversal point and a reversal point, and that sets up a trading range. And so something has got to happen in order to push us out of that trading range. And what will that be? I don't know. It's not going to be smaller acreage and smaller crop coming from the USDA. We know that. So it's got to be, you got to look at basis levels. You got to look at future spreads, and you've got to look at what's happening in South America, right? What's our supply really going to be? Because we know the USDA is going to give us bearish numbers. From this chart setup, all we see is sideways. I think we're completely sideways all the way down to 522 in May. Anything above 556, and I think we start to turn really bullish. But this is very interesting right here. This candle that formed yesterday. So we came in over the weekend and we gapped corn higher, and then all day long we sold it down, sold it down, sold it down until the end when we bought it. And what's interesting is that, see the body of this candlestick? I'll zoom in a little bit so you can see it easier on your phones. The body on this candlestick, the body is the green part. What's below it is the wick. This is Friday's trading range. This is Thursday's trading range. Everything, all of yesterday's action that occurred below these two highs was just a wick. All of the major action formed the body of this bar above the highs of Thursday and Friday. I think that's really bullish, because the last time we see that type of formation is right back here. There's a similar candle. Here's a similar candle right here. You've got the prior day's, you've got the current day's body fully above the prior day's trading range. And so I think this could be the beginning of a move that's much, much higher. So corn is short, right? You've got planting issues being delayed, and we've got an interesting thing happening in the new crop, which is today we seem to be puking acres to soybeans. We're going to take a look at that here in a minute. So can you stay bullish in the nearby and be neutral in the deferred months? And I think the answer is yes, you can, and that's probably a sign that we need to be buying the deferred months, not selling out. So the way I'm reading these charts is anything below 556, we're kind of neutral. Anything above it, we're very bullish, and think that this thing's going to reset to a higher level. Cannot rule out a move lower, but here's, if we do break, I think it's going to be really short-lived. And let me show you why when we look at soybeans here, okay? We talked about this Friday momentarily. We talked about this Friday in the little video that we sent out. Beans are now chasing this trading wedge. And when you think about wedges, a move out of the up or bottom of this wedge should move at least the distance of its widest point. So I'll do the math for you. That's $1.30. So if we break out the top side of this wedge, it counts to about $15.30. If you break out the bottom side of this wedge, it counts to about what is $1.30 from well, you'd break out the bottom side from here, so $13.50 down to about $12.20 or so. I don't think we'll get all the way down to $12.20, but if you match this move from the peak here, you get to about $12.70, which I know a lot of the Elliottians and the Elliott people would think would want to be buying it at that move, because this move would be equidistant to this move. So you'd have an A, B, and then a C. So you can't rule that move out because we're in a wedge and we can easily break out either side. But I think still that's a buying opportunity, not a selling. And I think corn, if it turns bearish and if it were to move lower, it's going to be because beans drop a buck. It's not going to be because something shifted in the corn market. I think things are shifting away from beans to corn because it's becoming front and center, and it's got to decide whether it wants to engage and buy acres or not. So this morning we've got a couple of troubling things in the corn market because corn, December corn's off 5, while November beans are up. So we've actually got the corn bean spread rallying higher. So we're now out to 262. And this honestly is what we don't want to see happen. We don't want to see corn puke acres up to beans. We'd much rather see beans rally and have to go buy them. So we'll pay attention to what this spread does, but the higher it gets, the more bullish we get corn, because with corn's balance sheet, if you do the math on its balance sheet, if we're at 1.5 billion, but we ignored 300 or 400 million bushels of demand, we're really at 1.1. We have to have the acreage in corn, and if this bean spread, if beans buy the acres, and if corn pukes them up, then that acreage number is going to shift. We're going to buy more bean acres and we're going to give up corn. And corn's too tight to let that happen, especially if we get into a situation in South America. So I think if this spread keeps going, then you got to be buying new crop corn at the expense of beans, because corn's not going to give up that many acres to beans. I hope that makes sense. So why are we puking them up today? I don't know. It doesn't make any sense to me. But as far as this chart goes, a lot of people are talking about a double top. Let me clean that up and get some of this stuff off of here. A lot of people are talking about this double top right up here. Remember, there's a saying in markets: double tops always hold, triple tops never do. So as we broke and now we're challenging back up, this is turning into a triple top, and triples rarely hold. So we're bullish corn here because it's not going to give up acres to beans. It just doesn't have the room to do it. So especially not with a damaged wheat crop and in the South America situation that we're in. So not at all interested in selling new crop corn because of all those things. I think we got way too much time we got way too much time before that happens. And here's another reason why we're really bullish corn and beans. This is the weekly chart of corn. There's absolutely nothing on here that's bearish. Yes, we have an outside week. Yes, it's a bearish candle, but we haven't even thought about challenging the bottom of this yet. And if we do, we're just going to end up with a wave 2 minor pullback, and then off we go. So we're looking much higher on corn in the near term, and I think that we've got to have more acres bought than what we're currently doing. Beans are in the same situation. They may even be stronger on the weekly chart than corn. We don't have any reversal action here, and we've not even really challenged the lower side of things. So this wedge is important, and we don't really want to see it break out the bottom. But look at this chart. Even if it does break down to here, how bearish is that, right? You're now just between your fast and slow lines. You're well above the cloud. You're going to be trading well above where we were 26 weeks ago. This is a buying opportunity, not a selling opportunity, because it's just a deep retracement in an uptrend. So we're bullish all the way around, and I see no reason to change that. Wheat had an interesting day yesterday. We've been in this sideways trading range for a month. We keep rejecting this lower level down here near $6, and we keep hammering up onto this upside. Now remember what we just talked about. Double tops always hold, triple tops rarely do. And here we go. 1, 2, 3. We gapped up higher yesterday. That's a big gap on the daily chart. This could be a breakaway gap. It could also be a measuring gap from the bottom down here. So guys, this counts to $9 if it does break. So what could cause that to happen? Well, we just suffered, sub-zero temperatures on a small wheat crop with no snow cover and a drought, and we just had all the world governments buy up tons of wheat all over the place, and we've got a dollar that's more than likely about ready to collapse. So could this be a measuring gap? It absolutely could be. We need to break up out of these highs in order to confirm it. But at this point, I see no reason to be overly bearish wheat from these levels. And as long as we hold above this cloud and nothing changes fundamentally, I see nothing to change that opinion. So the weekly chart's strong too. I don't have time to pull it up here, but regardless, I think wheat's going to work higher too. And remember, if wheat breaks, we just feed more of it because corn's expensive. So the corn wheat spread is bullish for both of them too. When you start to look at the basis levels all over Kansas and Oklahoma, wheat's cheap, so it's being fed into the rations. So wheat can't break very much, and any rally in wheat is bullish corn because it increases corn demand. So I just don't see we got too much demand. We have too many issues to worry about the downside today. So we're not interested in selling it, and we're going to leave everything completely open to the upside for now. And we're going to stay that way until something breaks. All right. That is what I've got for you today. I hate to be so bullish all the time, but it feels like a broken record. But we will turn bearish at some point. We just don't see a reason to be that way yet. Remember, there is significant risk in trading this stuff. If you are trading it, don't trade beyond the level that you can afford to trade, and do not get yourself overextended. And talk to an advisor or somebody to help manage those trades if you are going to be active. Hope you guys have a great day. I will talk to you next week.